I want to start off by saying the stock market is no longer only for old wealthy people or people on Wall Street. With today's technology, the stock market can be a great wealth building tool for young people. Hello everyone, my name is Joel and welcome to my YouTube channel. Today I'm going to be doing my best to explain exactly what the stock market is and how it works. Let's start by talking about how a stock gets on the stock market in the first place. What happens is a company is looking to raise funds. So what they do is offer an IPO. This just means that the company has set aside a certain numbers of shares that represent a certain percentage of their company that they are going to offer to the public. Then the consumer, you, me, whoever, has the opportunity to go and buy one of those shares. The price is actually determined by the buyer in the stock market. Whatever someone is willing to pay for a share of that company is what the market price for that share is going to be. So say Sally wanted to buy a share of Apple and she was willing to pay $155, but Mark had a share of Apple and he was only willing to sell it for $156, even though that's only a $1 difference. That transfer, that trade would not be able to go through until the bid, what someone is willing to pay, and the ask, what someone is selling it for, are the same. And as soon as that happens, that trade is done and that stock or share is transferred. So you can see the stock market actually works like any other market. There's a buyer, a seller, and a product. The buyer is someone looking to buy a share, the seller is someone looking to sell a share, and the product is the share itself. The easiest way to buy a share of a company is to have a brokerage. What a brokerage is a firm that actually acts as a bridge between you, the buyer, and the stock market, allowing you to use that brokerage to purchase shares. Now, most brokerages have an associated fee or a commission that they charge you for being that bridge, for allowing you to buy those shares. For example, I use E-Trade and that's a $6.95 fee every time I make a trade within the stock market. There are other free trading apps like Robinhood that have absolutely no fees. When you go to buy a stock, you're going to put in an order. Now there are two different types of orders, a market order and a limit order. A market order is when you want to buy the stock right away as soon as possible and you're willing to pay whatever the market price is for that stock, for that trade or order to be executed immediately. A limit order is when you're looking to protect your investment or you have a very specific price in mind. Say you wanted to buy a stock and the price right now was at $59.50. A limit order you would specify that you want to buy that stock for $58.86 and you will not pay any more. So your trade will not be executed until the stock reaches that price. And vice versa, if you're selling, if you'd had these stocks for a while and now the price is increasing, you see it going up, and the price right now is at $59 and you want to sell at $60, you could put in that limit order, say you're going to sell at $60, actually leave, and that order would be executed when the stock price or if the stock price reaches $60. The stock price to me really is just based on supply and demand. If there's a lot of shares available being sold but there's not that many buyers, that usually means that the stock price is going to be driven down because those sellers are willing to go lower and lower and lower until they meet those buyers. And vice versa, if there's a whole bunch of buyers and only a few sellers, the buyers will usually increase what they are willing to pay in order to get a share of that stock. This kind of explains why different pieces of news or different earnings reports or whatever it is affects the stock price. Because if something happens in the world or if there's a big piece of news or a company releases a new product, usually people will think that that's adding value to the company and they're willing to pay more for that share. The cool thing about the stock market is when you buy these shares, you are actually buying portions of these companies. For example, if you owned Apple shares, Tesla shares, Microsoft shares, whatever, you could honestly say that you are a partial owner of these companies. So just to recap, stocks are shares of a company, partial ownership of a company. In the stock market, it actually operates just like any other market. There's a buyer, a seller, and a product, and the price is just what someone is willing to pay for a share of that company. With that being said, thank you for watching this YouTube video. I hope you found it helpful. That's the very basics of what the stock market is. I'm excited to continue into more specific analytics, ways to choose stocks, ratios, I think it's going to be fun going on this journey with you guys. I hope that you would consider subscribing. In the future, I even want to buy some stocks and show you my process of buying stocks. Thank you for watching, and I hope to see you in the next video.